Hey traders, it's Houston from The Trading Edge, and just wanted to post a quick video today regarding some questions I've been getting about sharing my intraday setups. So I thought I'd put together a quick little tutorial around market structure and the kind of setups that I usually take intraday. So before I launch into my setups, let me just quickly give you a definition or kind of articulate what kind of trader I am. So I'm primarily an intraday E-mini futures trader. That is, I trade primarily the ES and YM intraday. Usually my holds last between about 5 minutes to about 30-35 minutes. I rarely hold overnight unless it's a planned trade. Alright, with that out of the way, let me give you some bigger kind of market structure picture, and then I'll give you an actual example of how it played out today in the markets. And today, while this video is being recorded, is October the 21st, which was actually a very good trend day today. So let's quickly talk about market structure. So what I'm looking for is what I would categorize as being kind of a pullback type of play. I want to see a strong run up, so a strong run indicating momentum and strength. Then I'm looking for a pullback, and I'm looking for the pullback and the trend of the pullback to break, and for that initial uptrend to resume. So what I'm looking for to enter, and where I'm looking to enter, is actually to enter on the resumption of the uptrend. So when this downtrend breaks, I'm looking to position myself long on this new uptrend. And I'll basically hide my stops underneath the previous low, so perhaps somewhere around here. Okay, so just to repeat again, this pullback may be indicative of or may be familiar for those folks who maybe trade fib grids or Fibonacci retracements. It could be a 38.2 retracement, a 50% retracement, or a 61.8 retracement, whatever it may be. If you're a Bollinger Band trader or a Keltner channel trader, then this could be a retracement to a mid-band. Whatever it is, for me, it doesn't really matter how deep the pullback is, so long as the initial run hasn't been violated. So if I'm able to get long at this area at a favorable risk and reward, meaning where I'm getting actually positioned here, gives me a favorable risk to reward ratio based on where I'm hiding my stop, my initial target will be the previous high. So this area right here is where I lighten up. So sometimes I'll take off the whole position, or sometimes I'll take off just a part of the position, just depending on how much profit I've taken, and just again based upon the market action. And as the trend continues, I'm actually looking to continue to buy pullbacks. So until the market reveals that the structure has changed, I will continue to buy these pullbacks. So and the resumption of these pullbacks until the market shows that it's not doing that anymore. So once again, I would go long somewhere around here upon the resumption of this downtrend, I want to go long on the resumption of the downtrend, and once again, hiding my stops somewhere beneath the previous low. And this works amazingly well across all financial instruments. So check it out if you're trading the CL, or try it out on individual stocks, but this works surprisingly well across all financial instruments. And this is not just a long-only approach. Once again, as the trend continues, eventually it will break down, and I would be looking to get short upon the break of a downtrend, or upon the break of an uptrend. So upon this uptrend being violated, maybe it's a deep retrace, and I'd be looking to get long, short around here, and hiding my stops above the previous highs. So what we're seeing here basically is a lower high structure, and I'm getting myself short based upon that structure. And for those folks who know, I guess wave patterns, this could be categorized as a kind of a 1, 2, 3, one wave, wave 2, wave 3, wave 4, wave 5 approach, with the ABC corrective waves going the other way. All right. So with that kind of overall market structure out of the way, let me give you an actual example of how this played out in today's markets. So today is the 21st, and let me just quickly scroll down here so we can see see where we are. And just based upon the price action in the aftermarket, when I woke up this morning, I saw the very, very strong run in the pre-market session. It's indicated by this very, very strong trend line here. And this again, the first thing I usually do before I start trading in the morning is to just check market structure. That will guide me in terms of the bias I'm going to have. That I'm going to be long biased or short biased. And I usually don't start trading until about 9:30 or 10 a.m. And so what I'll usually do is I'll usually draw in the opening range highs and lows from about 8:30 to about 10 o'clock. Okay, so that's kind of the opening range high here, and this is kind of the opening range low. All right. And so today I actually didn't take my first trade until about 10 o'clock because we actually had the housing numbers come out, existing house sales numbers come out today at 10 a.m. So I actually didn't start trading until after the housing sales numbers were released. So in today's environment, what I basically saw was I saw this downtrend, these pullbacks that were being broken, and then these lows being held. So at no point during the day were these lows being violated. This is all pre-market, of course. But even the pre-market, the lows were actually higher highs, right? And they were never taken out to violate it. So in fact, if you were trading right in the beginning of the day, simply drawing in those trend lines, so starting at 9:30, drawing in those trend lines and buying the trend breaks, so buying these, oops, buying there. This is the news, so I would probably skip the news, but you could draw it here, for instance. Trend line break there. Buying all of these trend line breaks would have been profitable and hiding your stops below the previous lows. And where I actually ended up getting long was I used the combination of that trend line break as well as this approach here, where I simply drew in what I saw to be a very nice kind of apex wedge or an apex triangle. And I ended up getting long here based upon this trend line breaking with my stops below this level here. I held this trade until the previous top, which is if I draw it right here at 16,444 with a fill around 16,401. So a good 40 tick trade with a risk of only about 400, and below here 89, I put about 15 ticks of risk. So really good 2+ risk to reward ratio, and I lightened up and took off my position here as I had other places to be for the rest of the day. Alright, so I hope that was useful to you, and if you have any questions about this setup or other trading questions, feel free to reach out to me at houston@thetradingedge.org. Thank you.